Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to take a look at some more of the stocks that were in play today. Okay, first up, let's look at TEAR. Okay, nice move today, closed up 8%. It's really heating up here. Check out RSI and Fasto. They both closed above 50 for the first time in a couple weeks, so that means that they're in the bull zone and there's room to run until 70 on RSI, until 80 on Fasto, so they've got juice to head higher. Now the development today was the close above this green line, which is the 50-day simple moving average at 139, and above the middle Bollinger Band currently at 143. And so what needs to happen now is both levels need to turn into support. If you notice back here, the last close is above that level. Share price failed to turn the 50-day simple moving average into support, and it pulled back. So it's consolidated for over 2 weeks since failing to turn the 50-day simple moving average into support. Now, if it holds, that's going to be a bullish change in trend, and now we could see a new uptrend begin. The target is up here at the 100-day simple moving average at 169, 168, and the upper Bollinger Band. That's this gold line. Notice how that level was hit last time. And if it can close above that, then that'll signal it wants to head higher. Notice how pinched the 12, 26, and 9 MACD is, and how pinched it is on the 8, 13, and 5. You know, that signals the consolidation, and now it's starting to break out higher. So yeah, so keep an eye on TEAR. We're going to see if it can get a new uptrend going. Okay, take a look at MCEP. This was alerted pre-market in our chat today, along with we alerted the small cap energy and energy stocks are heating up. They're starting to find support with crude oil hitting 53 there for WTI, and then Brent breaking out. These stocks are starting to heat up a little bit, so keep an eye on them. We've got MCEP here at 60 on RSI and at 67 on Fasto, so it's in the bull zone on both levels. There was a bullish crossover here on ADX. Notice how the green line crossed the red and the black line to the upside. And so the bullish development today for this stock was the close above the middle Bollinger Band and the 50-day simple moving average. It also closed above the EMA 13. So notice when the middle Bollinger Band broke here, the candles were riding the EMAs 4, 8, and 13 lower. And then today there was a big break above resistance. Notice the 50-day simple moving average at 105 and the middle Bollinger Band at 103. Those are two huge levels. If they can turn into support, a new uptrend could begin. You know, back here in September, MCEP closed above and then pulled back and failed to deliver. Okay, so if you look here, there was this red descending resistance line, and the share price closed right at resistance again, the same level as September. So that is lined up currently with the 100-day simple moving average at 116. If you see a close above 116, above the 100-day simple moving average, that should be the signal it wants to head higher. There was a volume spike today. Notice that there's the MACD bull crosses on both time frames, and then you have the PSAR bull flip. So the chart's signaling that it wants to head higher. It just has to break resistance. Okay, take a look at CGIX. Okay, so this stock had a bullish close today above the 50-day simple moving average. Notice on Friday it had closed above the middle Bollinger Band and the 300-day simple moving average down here at 273. So it was really good follow through today. The key level to hold is going to be this 50-day simple moving average at 299. The close was well above the upper Bollinger Band. You could see the candles work back into the bands. The bullish thing would be to bounce off of the 50-day simple moving average if it did consolidate. If it's going to break out higher, it's got to get above this red line and gold line. So that's the 200-day simple moving average and the 100-day simple moving average. A break above the 100-day simple moving average at 338 would be very bullish, signaling more upside potential. Notice that back here, it failed to turn those levels into support and pulled back. So we're looking for a bullish change in trend. There was a big volume spike today, so keep an eye on CGIX. Let's take a look at another energy stock here, small cap stock. This is CEI. Keep an eye on for a break above 50 on both RSI and Fasto. It did have a bull cross here on ADX, and so this stock has a history of forming the black candles, where it looks like the day's starting off good, and then the bulls or the bears drive the price down. All these black candles on here represent that the share price closed above the previous day's open, but failed to close above the open, and so the stock was up on the day, but it failed to close above the open, and so each one of these black candles represents possible dilution, definitely bears attacking, and so for a bull, that's not what you want to see. You don't want to see the long upper wick. You don't want to see the black candle. It did close above the middle Bollinger Band today at 15.7, so that level needs to turn into support. Notice there is a gap between these two candles. It could pull back and fill the gap if it dropped down to EMA 4. Now the reason why we're talking about this chart is because we're looking to see if the middle Bollinger Band can turn into support, and then keep an eye out for a break above this green line. If you see a close above 18, a close above the 50-day simple moving average, that'll be the signal CEI is finally ready to go. There was a big volume spike today. It has been consolidating for a while. The chart could heat up, and if it fails to, if it closes back below that middle Bollinger Band, it will no longer be in play. So keep an eye on it. It's got the really pinched MACD on both time frames. It had the PSAR bull flip today. The green dots are now below the candles. Notice how the dots had been above the candles since back here in September. So this is the first flip since then. So yeah, the chart's trying to heat up. It just has to follow through. Keep an eye on NOG. Okay, this is another energy penny stock that's heating up. Okay, so it's got a lot of ways to go here until the 50 level on RSI and Fasto, but it is heating up on this basically dead cat bounce. Notice that the share price pulled all the way back. It had been riding EMA 4, this pink line resistance lower, and then today there was finally a close above resistance. It closed above EMA's 4 and 8. As long as it can stay above both levels, it will be in play. If it closes back below the pink line at 683, it will no longer be in play. There was a PSAR bull flip. It needs to get above EMA 13. That's the orange line here at 772 basically. If it can get above that, the next big level is the middle Bollinger Band at 78, basically 775. That's the next big target. It needs to turn this 50-day simple moving average at 83 cents into support to head higher. Notice how it tried to do that in September and the beginning of October. It failed to do that and it pulled back. So right now we're going to see if it can retrace back to that middle Bollinger Band. That would be another 10% gain from the current level. You've got MACD bullish crossover on the 8, 13, and 5. If that 12, 26, and 9 MACD crosses over, that would be a signal the chart is really heating up. Okay, let's look at another energy penny stock that's currently starting to heat up here again. It's got RSI above 50 now. You've got Fasto above 50. You've got a bull cross here on 80X. There was a parabolic SAR bullish flip. The green dots are now below the candles. You've got the MACD bull cross on the 8, 13, and 5, and the 12, 26, and 9 is pinched. Okay, so everything's heating up. What isn't heating up yet is the volume. Look how low the volume is. It needs to have a bullish volume spike to really be a signal that it's ready to head higher. So keep an eye out for one of those tomorrow. You want to see a spike above the previous volume bars. So if it's hitting like 1 million in volume, that would be a good sign. Today the close was right at the key resistance level. Notice that the 100-day simple moving average here at 79, that gold line, had been a big level to turn into support. It failed to do that and it pulled back. It came down and it held the green line. Notice how long it bounced off of that 50-day simple moving average, currently at 71. I mean, that was some serious consolidation. It seems like it wants to really get moving higher here. If we draw let's get rid of a couple of these lines here. So if we draw a line across here, so this is showing the descending resistance. What you can see is there was a break above the resistance line today. So notice how this had been resistance, and then today there was a break above. That's signaling that it wants to head higher. So the next targets are going to be up here at the upper Bollinger Band and at 90 cents. Notice the high close here on the first trading day of October, October 2nd. If it can close above that level, that will signal dollar lands on deck. Right now the trade is between the 100-day simple moving average at 79 and 90 cents. If it drops back below the middle Bollinger Band, that'll signal more consolidation and that it's a risk to hold. It could take a while. Basically, it has to hold this 50-day simple moving average. If that level breaks, all bets are off for the bulls. So keep an eye on GST. And then let's take a look here at ROKA. This is a bounce play. I think you should keep an eye on here. It looks like it's starting to, it's trying to set up here, I should say. It's got Fasto oversold levels. It's formed 3 red candles in a row. And if you notice here between the 26th and 27th, there was a gap down. And so now there's an upward gap gap on the chart. So this looks like it could possibly bounce off this green line here, which is the 50-day simple moving average at 120. It's been trying to hold that level. If it can hold that, it could bounce off of it and go back up here and retest the middle Bollinger Band and fill the gap. And so we're looking right now for a potential bounce and a gap fill back up to about 140 or so. And 140, a little above 140, about 142, and that would fill the gap. So that's some nice percentage gains between here and the top of the gap. If it can break above this descending resistance line, notice how it started forming this downward megaphone type of pattern. It has to break the descending resistance, and if it could do that, then it would be back up here at the 100-day simple moving average at 185. That's the big level to break. It needs to turn that level into support to head higher. It's good. It's holding the 50-day simple moving average support zone. Now the risk is that this level fails to hold, and then the low close is right here on the 24th. Now if that level broke and there was a close below that level, that would signal downside risk, and a gap could fill. There's a gap back here between the top of this candle and the bottom of this candle. This line represents the top of the gap and the target if support breaks. So this is really only a good play if the 50-day simple moving average holds. Notice the candles are forming below the middle Bollinger Band. That signals the possible start of a downtrend. It has to get back above the middle Bollinger Band, or else it'll signal the bears are in control. And then the reason why I'm showing you this chart, another reason besides it hitting the 50-day simple moving average on the daily chart, which is a key support level to bounce off, it is breaking the 50 simple moving average on the 15-minute chart. That's at 119. It closed above that level. It needs to stay above that level. If it can stay above the dotted purple line, the middle Bollinger Band at 115, and above the 50 simple moving average at 119 on the 15-minute chart tomorrow, that would be a signal that it's in play and it wants to heat up. The 100 simple moving average would be the next moving average resistance level to break, and then you've got the gap back here. So notice you got the gap, and then so we can put in the gap for you. And so always a big level to break is the bottom of the gap, and notice how that's lined up with the 100 simple moving average. So if it breaks above the 50 tomorrow and runs up here, it could hit some resistance. If it can break above that, the bottom of the gap and the 100 simple moving average, then it has to get above the 200 simple moving average, and then the gap, the bottom of the gap, is lined up with 143 or so. Okay, so yeah, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.